Iran has just attacked Israel. And of course, immediately people are worried about world war. They're worried about what's going to happen to the stock market on Monday. Well, guys, the history of the stock market is very clear that in the long run, what matters is what are the fundamentals of the economy and valuation. Are there going to be hiccups along the way? Absolutely. There have been wars. There have been assassination attempts. There has been every possible financial and worldwide disaster that's possible. Terrorist attacks. It does not matter. At the end of the day, what ends up happening? Eventually, we recover and we get better every time. Now, is Monday likely to be a big drop? Probably. But we don't know what's going to happen. Could this be a very short-term thing? Yeah, maybe. What matters is valuation. So if you believe that the stocks you own are priced well, if they fall very hard over the next few weeks or the next week or whatever it is from this skirmish, from this war, then that should be an opportunity for you. That's what's key here. But the problem is people think about these wars and think about these attacks and say the world is falling apart. I'm on Twitter. I see it all the time. And I just go, oh my gosh, people don't get it. These things that happen, are they important? Yes, but not for the reasons you think. We had terrorist attacks. We've had wars. We've had assassination attempts. We've had everything possible happen. And guess what happens? We get better. The world gets better. Use it as an opportunity while everybody out there is freaking out. So obviously the emotions can ride very high during those times. And as we know, emotion can drive stock prices down very, very quickly. Just like emotions can get stocks to go up just like emotions can cause stocks to go sky high and drive up in value, they can also go low. We've only experienced in the last 10, 12 years, 15 years, stocks going up, except for 1 year of a bear market in 2022 and during COVID for 1 month where we saw stocks fall 40%. Other than that, we've pretty much seen stocks continuously go high. Is that reasonable? Probably not. This war or whatever comes of it is a problem, but for the people involved in it. And that's what you should feel worried about. You should not be worried about your money. If you buy good companies at good prices, then any sort of calamity that causes stocks to fall should be an opportunity for you. We talk about this all the time. We have the fundamentals. The fundamentals are what drive your buying decisions. But how you make more money in the long run is by handling your emotions, sticking to it, and letting stocks ride out longer and longer and longer for longer periods of time that allow you to compound. But if you buy bad companies with bad balance sheets, it's going to be hard. You're not going to want to hold your stocks very long. But if you buy good companies with good balance sheets, and most importantly, you buy them at the right price, these kind of things that happen are an opportunity to buy more shares of those companies at better values. Now, Bitcoin. I put on Twitter today about Bitcoin. This Iran attacks Israel. Within 30 minutes, Bitcoin fell 10%. Of course, I sat there and said, how is this a flight to safety? Everybody said Bitcoin was a way to keep your money safe. How is that possible? Then it should cause Bitcoin to go up. The more things that are going bad in the world, Bitcoin should go up. But it's not happening that way. Bitcoin's down a lot. Then it rebounded a little bit. It went down to 60,875, went back up to 64,000. And as of right now, it's currently sitting at 63,157. That's a big drop. It's over 70,000 just 2 days ago. Bitcoin is highly volatile. These things should be good things for Bitcoin. I don't think it is because it's a very volatile asset for a reason. I think wherever way we see the NASDAQ going, we're going to see Bitcoin going. It's easy to believe in things as they go up in price. And we always sit there and say, somebody on Twitter put a poll out today and said, if stocks fell 25%, what would you do? I look at the comments, oh, I'd buy more, I'd buy more, I'd buy more. And I laugh. The reason I laugh is if the stock fell 25%, people would sell. But they would say, yeah, but the difference is now we know this and this and this. No. Story follows the stock price and not the other way around. Look at Tesla. I talk about this all the time. 2.5 years ago, Tesla was at $4.15 per share, and you could not find a better company to invest in. You were stupid if you don't get it, blah, 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 blah. Now the company's at 165 and the revenue's higher, the profit's higher, but now it's look at all the issues with Tesla. They're having this. And I'm just like, oh man, this is exactly the idea I was talking about. Back in 2006, 2007, I sat with friends and said, hey, if stocks fell in half, what would you do? They said, we'd buy more. Then the great financial crisis happened. I get a frantic email from the wife. What are you doing, Paul? What's going on here? I'm like, well, we talked about this. I'm buying more. Are you actually buying more? Yes. No, I just think our stocks are going to zero. And I said to her, what would the world look like for stocks to go to zero? What would have to happen? She was invested in mutual funds and ETFs, not in individual companies. So what would have to happen for that to occur? That's my point. And guess what happened from there? Stocks rebounded. We went through a terrible financial crisis, and now stocks are 7 or 8 times higher than they were back then. And that was only 15 years ago. And I guarantee they waited a long time to buy back in because fear does that to you. I see it in myself. I'm fearful about things. I get scared when I sit there and see things happen and stocks fall. It gets scary. But luckily, I can take a step back. I can go to our community, our Everything Money community. We have conversations about this. I go through my retirement calculator. Am I still on pace for the money I want to have for later on in my life? I go to our fundamental stock analyzer tool. Are the companies I bought still selling for a good price based on some sort of reasonable growth rate in the future? If the answer is yes to all those, what do I have to do? I have to get over my short-term emotional reactions to things. Don't get me wrong. They are scary. They feel scary. But as Morgan Housel always says, past bear markets look like an opportunity. Future bear markets are scary. They're not that way. Future bear markets are an opportunity as well. That's the key here that I want you to understand. And Iran attacking Israel. I'm from Iraq. I was born there, so I accidentally said that. Iran attacking Israel. I'm not telling you to look at it as an opportunity, but if stocks fall hard because of that, you have to sit there and say, why are they falling hard? Why is all of a sudden if Microsoft fell 25%? Why should Iran attacking Israel cause Microsoft stock to fall 25%? Hypothetically, if their revenue keeps going up, if profit keeps going up, why should that happen? Is it unsettling? Guys, there's a lot of things that are unsettling that happen in the world every single day. There are millions of things that happen. At the end of the day, what matters in the long run is GDP growth, revenue growth, profit growth, but most importantly, paying a reasonable price for all of that. That's what matters the most. The best thing in the world isn't worth an infinite price. That's why we teach these fundamentals. You have to sit there and be okay ignoring the herd. That's how you're going to do best. So if you like what you hear, I need you to do 2 things for me. First off, if you want to get weekly updates, we do several videos a week, subscribe to the channel. And second, if you're interested in being part of a like-minded community of investors who will sit there and help you during the toughest emotional times, click the link below, join our community, $7 for 7 days. Thank you for your time.